We continue to watch the data here when it comes to China. It seems like the fundamentals are looking improving on that. Does that justify, you think, the rally that we've seen in Chinese stocks of late?
Hi, good morning, everyone, and thanks so much for having me again. Yes, indeed. Actually, so far, the China economic data are quite suggesting that economic recovery remains on track. And then also, of course, we saw, for example, the Golden Week data, which shows that Chinese consumer data has also recovered well, with retail sales growth stepping up and tourism or transportation, even though it has only recovered back to like 70 to 80% of 2019 level, but then actually still doing much better than in previous months. So, so far, the momentum is actually continued to rise. And so we continue to like China A. And of course, we right now in the near term, we will suggest investors to remain cautious because of the, for example, the upcoming election risk, and also not just in terms of foreign, like U.S. election, but then domestically, there's also domestic political issue like the 14th five-year plan, and also market will still be waiting, for example, from any potential news from Shenzhen or any financial market reforms that may be reviewed.
Yeah, and we're just getting some breaking news, at least our sources reporting that when it comes to the economic recovery, it seems like banks are not as much as what we saw earlier tearing the burden of this economic recovery. They're said to be easing demands on banks to lower and deliver lower profits now. Marcella, to what extent does that actually ease the concerns that many investors had when it comes to investing in Chinese banks, and does that warrant some type of re-rating?
I guess right now, Chinese banks, because interest rate wise is comparably higher than other regions. But then I guess right now with Chinese banks, it's still kind of like, just like financials, it's kind of like a value play. So many focus will still be on other sectors like healthcare, and also with regards to, for example, the consumer sector. So those are still our key focus. And because we still, in the near term, we believe that growth, like we still think that the growth versus value play will eventually rotate. But then in the near term, we still believe that growth might be the way to go in the near term, given that we're still waiting patiently for this rotation to happen.
Marcella, any concerns at all that sectors that you just flagged there, IT, healthcare, consumer durables, any of those sectors are looking overcrowded at this point, particularly with the run-up that we've seen in the last few days here in China?
I guess right now with Chinese equities, yes, indeed, we see that valuation-wise, it's been rising, but it's actually more reasonable compared to 1 month ago. And actually, admittedly, a recent rally is quite strong and valuation is pushed back up. This market may become more volatile again because just as I mentioned with the U.S. election and also the potential U.S.-China tension, and with this market mostly driven by investor sentiment, the market might get volatile again. But then we believe that once things clear with the election getting out of the way and with domestic political issues clarified, market will continue to pick up. Once also when the market have more clarity on corporate earnings performance in 2021.
Okay, you've touched on a few of these. You released your fourth quarter market guide, the 3 Ps, you say, to key drivers heading into the final quarter of the year. Politics, pandemic, and policies. Again, you've touched on policies and politics. We got a bit of pandemic news with the Johnson & Johnson vaccine trials being halted. Just flesh out that market guide for us.
Yeah, sure. So we just released, JPMorgan Asset Management just released the Q4 guide to markets. And just like you mentioned, we expect the 3 Ps, pandemic, politics, and policies. And with the pandemic, actually, we believe that the pace of the global economic recovery might likely moderate as we approach the end of this year. And as we all know, governments are still trying to strike a balance between maintaining the economic momentum and also mitigating the risk of another outbreak. And like you mentioned just now with the vaccine, we see that vaccine development has progressed quickly and remains crucial to the next step in completing the economic recovery. And we believe that it will be turbo boost to broader asset classes if we indeed find a decent vaccine that can actually hopefully can cure the COVID-19.
All right, Marcella, hold on a second. We have some more data coming through here from China. This is from the China Passenger Cars Association, which is reporting that September retail passenger vehicle sales did rise 7.4% from a year ago. We have seen some, at least when it comes to domestic story in China, some improvement when it comes to some of those car sales as well. So that's certainly looking a little bit better. Marcella, I want to get back to your call here on vaccines. I mean, we saw the headlines here. As soon as you get something on some kind of study being halted because of a patient getting ill, markets sentiment suddenly turns quite negative. Do you think that investors are still too complacent about the COVID impact on economies and piling up too much hope on a vaccine?
Indeed, actually, you're right, Yvonne. We continue to believe like vaccine is like a binary outcome. Like what I just mentioned was like with the vaccine available, it would definitely boost risk sentiment. But the current vaccine narrative actually may eventually need a correction. For example, like you mentioned just now, there are other headwinds that are not fully realized, and there are also logistical challenges. For example, once the vaccine is being available, who will get it first? Which country will get allocated? And which group or which demographics will be allocated as the first group or the last group? How will that be ranked? These are all not being priced in by the market yet. And like you mentioned just now, if they turn out to be unsuccessful, there will also be disappointment or sector rotation. And how will the sector be rotated? Will it be rotated away from U.S. or towards away from the country with the vaccine that is being developed? All these actually have yet to be priced in by the market. So this will be actually one risk that the market might be missing at the moment.